discovered, or is the discovery is in nascent stage right now?
So, at pretty much any level of the market, whether we're at the top or the bottom or in between, there are always opportunities that will get created for the next 3 or 4 years. And there are always companies at various points in their business cycle where there's either some turn or some change occurring. So it continues to be very bottom-up based. But essentially, for the last 4 or 5 years, we've been in a market which has been focusing on growth at any price type of thing. Our sense is growth at more reasonable price is what we're ideally looking for.
That's changing right now? You think that's changing?
Well, there are opportunities. I mean, that's how you have to look at stocks. Where can you find companies where you feel valuations are not pricing in too far into the future, but at the same time, there is some level of growth.
Examples which you can think of right now?
Can't give you
not stocks, but maybe, if you could give some sectoral themes.
Broadly categorize it as, when we look at companies at the end of the day as investors, or we look at any stock market anywhere in the world, what you're really focused on is what is the return on capital being generated by that group of companies or that individual company. And you're always trying to look for companies where the return on capital ratios are rising. There's something in their business that is resulting in better utilization of their capital and higher returns coming out of it. That tends to follow up with better prices for those companies and better valuations. So you're looking, irrespective of which sector, but you're looking at ROEs today. How far are they from their normal business ROEs? And is there any scope for that to rise? Or is it sitting at a peak and is there scope for it to correct? And wherever you get incremental ROEs rising, I think that's where you look for opportunities essentially.
Okay. Prashant, come in on this point about valuations. What do you do with companies where the managements are ethical and capable, but some of these companies seem to be structurally challenged. So case in point, say Tata Motors, where nothing seems to be wrong, but it's just that it's going through a bit of a slowdown. How do you take investment calls at times like this?
I think so. All of us are dealing with uncertainty, and that is the good thing and the bad thing about this business. That is what makes it exciting and challenging also. So I think it depends on what view you take of the business. So I don't think there is any clear answer to this. For every share that is trading, there is a buyer and there is a seller for every single trade. And the two of them are taking diametrically opposite views of the same company, same price, same time. So I don't think you will get any proper answers. You will get opinions, but I don't think you will get any answers to this.
Okay. Now, Prashant, you've been extremely bullish on private sector banks. Some of your top holdings in your funds have been some of the bluest of blue chips in terms of private banks. That's been a sector which has actually broken the markets back this year. We've seen massive correction in names like ICICI Bank, HDFC Bank, even a couple of other names. Is there something fundamentally going wrong here, or is this just one of those phases which will pass and is actually presenting a very good buying opportunity, which we'll maybe come to know in hindsight over the next 2 or 3 years?
I think these markets are in transition, if you ask me. I mean, that's what I feel. That we have seen a period last 4 or 5 years where growth was scarce. It was limited to very few sectors. And we faced challenges on the currency front, on the current account front, on the interest rates front. And your whole CAPEX cycle was broken completely. So we have had a flight to quality, and now I think the economy is in transition, the markets are in transition. It is something similar to 2007. So before 2007, if you see, the consumer, the pharma, the IT stocks were actually underperforming. You could have bought no one remembers these things, but you could have bought many of the consumer companies of today in 12, 14, 16 PE multiples. So I think these markets are changing from that phase once again, and I think going forward it will be investment led. But as you rightly said, yes, in transition years there is always, it's not a quick transition. It takes time for the markets to give up slowly what has worked so well for 7 years and to move on to the next cycle. So I think what you referred to in banks, I think it's part of the same process. But I think this is my feeling that if markets have to move higher, it would be difficult for markets to move higher without banks.
Okay. You know what, let's just take a break from markets and stocks for a bit, because I'm sure all of us here want to know what the learnings are, after a wealth of experience that you guys have had. So Naren, I'm going to start with you. I was reading this very interesting book put out by Saurabh Mukherjee of Ambit, where he did a piece on you and he mentioned this group you had joined in Chennai of like-minded equity investors who shared the biggest mistakes of their career. Share with us what the biggest investment mistake is that you made, which you regret even today.
Biggest investment mistake if I had made, I wouldn't be in this job. I think
I'm sure there's something you regret. Maybe a stock
clearly,
that
you know,
you
you
sold
regret.
and perhaps it went
You
on
do
to become a
regret. For
multi-bagger.
the past 2 years, we've been telling people that consumer stocks are overvalued. And we keep saying that. I think every quarter we say it, every month we say it. And the stocks have virtually gone up consistently over the last 2 years. Now, I ask myself, could I have not come to that view? Or even for the recent past, over the last 2 years, last 2 years, we've been thinking even pharmaceutical stocks don't look cheap. But those stocks keep going up. So I would say it's something like we've seen that these polarization in market valuation is something which kind of has baffled me, and would I call it a mistake? The day it becomes a mistake is if after huge outperformance of pharmaceutical or consumer, I now say I'm going to go overweight the sector. That I haven't yet done, but our research processes forces us to keep thinking whether we should actually change our view. Are we wrong? Actually, was it a mistake to have done it? So that we keep. So I would say that is certainly a mistake at this point of time. And one thing is that you'll never, as an investor, you'll keep making mistakes. And as long as we make lesser mistakes than we think we'll get right, we will be in this chair. Well, otherwise, you know, we'll have to find ways. That's what I've seen from my...
Okay, so on the flip, let me flip that question over. What's the best investment decision that you've taken? Any anecdote, any stock perhaps that you caught at the right time, which really, helped you get set in your career?
I think the best investment decision I made was in 1989 deciding that I'm going to build my career on equities. And over 26 years, it has been a phenomenal experience for me. The second best experience was in 2000 to 2002 period. Most of my classmates came to me and said, you're in a useless field. It's delivered nothing for the last 12 years. Come out, come to tech. And one of my friends got me a job in a tech company. And despite that, I said, no, equities is the best asset class. So in 2001, to have staked your bet that equities is where you want to be was the toughest decision. And I think what sectors you took, what capitalization you took, those were smaller than the bet that we took in 1989. It is going to be equities.
Okay, you still haven't answered my question, by the way, on the stock. But Anup, I'm going to toss this question to you. Whichever of the two Anups want to start off first this time.
After you.
Anup Bhaskar, come on. Which was your best investment decision and your worst investment decision? And now you have to give me individual stocks because he passed it on.
I think it's quite public. I bought and sold out of Unitech and made 100 times on it.
Sorry?
Unitech.
Yeah.
Unitech.
But I sold out of it also.
Okay, that was your worst. What was your best?
No, that was the best
That
because
was
I
the
sold
best.
out
Oh,
of it.
that was your best. Okay.
So if you could tell us at what price you managed to sell out, because now it's 6 rupees.
It doesn't matter. I mean, but I sold off, before I left my job in 2007. So
And what was your worst?
that is every year. There is one stock which keeps on haunting. So
Okay.
every year there's one, trading stock I take a bet on and lose 60% on it. This year was Tata Steel. Last year was something else. So it's quite embarrassing, but it's very public. So
Anup, that's interesting because, not many people would believe that, Unitech could be your best decision, in terms of buying a stock and then selling out and then seeing the kind of bear market that we've seen in Unitech. We rarely get to talk to you. So a lot of people want to know what's your investment strategy? I mean, for picking a stock like Unitech, for example, or Tata Steel for that matter, what would have gone to your mind before picking a stock like Unitech, and what would have made you sell that stock?
no, I sold it because it made 120% on it. So
Okay. But
At
in
least-
general, when you're investing in
I
mid
did
caps,
120%, 120 times on it, so which is why I sold it. No, I think so. Again, I'm saying that it's taken a long time to build any kind of a philosophy because we've tended to be swayed by market pulls and pressures for a large part of our working career. So what you can do at best is make sure that a certain percentage of your portfolio at all times has certain discipline that you would want to have. And your ability to have the discipline is usually decided by your rank, within your peer group. So if you're doing well, you have more discipline. If you're not doing so well, you have slightly less discipline because you are trying to run and cover up lost ground. I am not a big believer of value, unlike Naren. Naren is an expert at value. So I believe in India, value plus growth is what matters. So value for the sake of value really doesn't work. And therefore, you can't overlook growth as such. So we generally, tend to buy companies which are more reasonable in valuation. But that doesn't mean we don't have an Eicher motor or something like that in our portfolio. But when we bought it, it would be based on that philosophy. Our selling is based mainly on what kind of weights we want to have of those stock or sectors in our portfolio. So we keep on trimming them as such. Because it's very difficult to take a absolute call on stocks because you don't know how much they can move up until unless it becomes a blinder and you've seen something. So you would always want to protect your portfolio by ensuring that it doesn't become 5, 6, 7% of the portfolio, and you keep selling it based on that. And you don't have any kind of, if you look at price levels which are more absolute, that I'll go and exit at X price or Y price. What you want to ensure is that the risk to your portfolio keeps on going down with the price rise. Yeah. People tend to think the opposite. They actually want to concentrate more with price rise. We actually want to reduce the stock weight with price rise. And that's what we do, especially in terms of the mid-cap fund. The focus is that the top 10 should never become 40-45% of the portfolio. So you run a more diffused portfolio. It shows a lack of conviction. But then I think so it gives us more liquidity and less worry in case of bad days.
Okay, you did say Tata Steel as one of your mistakes. Of course, it's fallen a lot. So have you sold out, or is there temptation to buy more?
I don't want my investors to be the prisoner of my conviction. If it was my own money, I would do what I feel like. But when I'm going and I'm now managing money for others, so I have to ensure that the risk of that is actually minimized, and I try to go and preserve capital as much as possible.
Anup Maheshwari, coming on that, Anup saying that you don't want to perhaps run concentrated portfolios because you become a prisoner of it over time. But what do you do with winners? If there is one winning stock in your portfolio and then the market starts to sort of see a downtrend, do you book profits or do you continue to hold on to that story?
It's just a function of whether your investment thesis is still the same. What I've realized over time is valuation should not be the only decider of your view. If you have a good business with a good management, with good economics, there will be points where the stocks become overvalued, undervalued, depending on the mood of the market. But you're better off just holding those businesses over time. The longer you hold them, the better off you are, the more you participate in that growth. You'll have some good times with them, some bad times, but over time, doing less is probably better than trying to react to every valuation episode in that business. So, to our mind, unless valuations become really stretched to the point where your next 3 or 5 years growth seems to be priced in, you'd normally live with the stock, even if it's overvalued from a 1-year perspective, maybe.
Okay.
So that's the approach we normally have.
So your best and worst investments, Anup?
I can tell you the worst. It's easier to tell the worst. I think the worst was not owning enough of HDFC.
Okay.
I think, considering how much value that group has generated over the last 20 years, plus, I think, it's odd actually. Most of us have never held enough of that group as we should have, perhaps, for the value that was generated. Deepak Parekh very painfully reminded us of that fact also. At some point in time, he said, your funds would have done much better if you owned more of my stock. Okay. And he was absolutely right. So I guess that's the most
That becomes the best as well, because whatever limited amount you would have bought, that would have given you enough return.
Yeah, I guess so, on a relative basis.
Okay, but Prashant, what about you? What is that one stock or one investment decision you took and you said to yourself, okay, now I have arrived?
I don't think it would be possible to say one investment decision.
There are so many.
Pardon?
There are many in that list.
Yes, I think in 20, 25 years, each one of us have taken many good decisions and a few bad decisions as well. I think, but we were early investors into technology. Fortunately, we sold out, moved over to the capex cycle in time. It was just beginning to revive, which was a huge winner between 2000 to 2008. And I think then again we were slightly ahead of the markets, but moved out of capex and moved into consumer IT pharma. So I think when I look back, these are the three broad themes that I have seen. And we have been early, we have made mistakes, but by and large, I think over a period of time, we have got it.
Okay. Gopal, you want to comment on that? Because, some of your funds have had a great run in the last 1 year or so. What are the calls that you make which helps you sort of wade through all the market chaos? How do you really go ahead and pick up stocks when the markets are so volatile?
See, overall, in the research process, we have taken this decision that at this juncture, the story on margin expansion will play out very well. Okay, so we focus on the consumer-centric businesses with margin expansion. So that was the center of our portfolio. So and we actually tested every time our conviction and the assumptions, and it has really worked out very well. And still, we are a believer that the people are moving up the value chain. Their aspiration is rising, and this is a structural long-term theme. So we have stick to it, and also at every, throughout this journey, we also evaluated our price-value gap. So whenever, like you asked us a question, like whenever a stock has a run, what do you do with that? Actually, you should always evaluate your assumptions, and if the price-value gap is there, we should even add, even if there is a volatility, or pare down the certain positions.
Okay, so let's move on now. We have spoken about market, we have spoken about individual stocks. Let's talk about our fund managers and ask them what they do in their free time. Actually, Anup, I want to start with you. Equity investment is such a stressful job. What's the biggest stress buster for you?
I don't know about others on the dais, but generally in our business, we're very boring people. So, while the job itself is probably one of the best you could ask for. You get to meet fantastic people, the best minds in the country. You have full access to senior management. You talk to them, you question them, you learn about their business, they explain it to you, and you get paid for it. So it's the best job in the world. Yeah. So it's really great. And most people in this business generally have a strong passion towards it, which is why they last as long as they do. So in your free time, I think, it's more family, etc., those type of activities. But a lot is also involved in just thinking about various companies and reading up on investments and styles and what's happening everywhere in the world.
Okay, Anup is being very modest, so he's a big exercise buff and he's not telling us that. But that's what he told us during breakfast. But Naren, what about you? How do you stress bust?
I actually don't enjoy exercising, and
It's okay, you don't have to come under pressure.
But I try to play computer bridge, given that today the technologies are so well developed today that even if you have 15 minutes, you can play computer bridge. So that's interesting. Other than that, you do, we have fairly long hours, and then we watch unnecessarily. We spend time watching markets. If you ask me, see what's happening to NASDAQ or Dow or family time. These are the things that you spend time on. But I think if we actually, as investors, if we spend lesser time watching markets, I think we can save a lot of energy and do a lot of things productively. And I've seen some of the people in my team, they spend lesser time watching markets. And they're the most productive people who find time to do many more things. So I would always say that what is the point in us knowing what is happening to Dow at 11 p.m. in the night? I think that is one of the activities which if people cut, they'll find time for many things, maybe even exercising.
Okay. Well, that's very interesting feedback, because that's the feedback that we get from a lot of the experts who don't sit in India, who sit in Singapore. They tell us that, because we don't have the daily rigmarole of looking at the markets, we generally tend to increase our productivity. But Anu Bhaskar, comment on that. How does it help you to bust your stress? And in terms of the daily, watching of the markets, etc., does it just help you to take 2 steps back and perhaps not look at the chaos of the market?
I wish that was the case, but it's become a habit, like Naren says. So if I don't switch on the Bloomberg, I feel lost. So, but I think so. One thing which which I find, with all due respect with our peers, is that if you see the US market, one thing you find is that some of the people there, do write very well. They write quarterly or twice a year or thrice a year. And I think so as an industry, we have missed that trick. And it is because A, we are not that much experienced. B, we do not have a philosophy that we swear by, because we are more the prisoner of the moment rather than saying we have X style and we will stay through that. So I try to spend some time trying to build a thought process to, write about the quarterlies as such, but it's not something I've succeeded at. That's something that I feel as an industry, why we, I think that could help a lot of our investors if we wrote with some style and gave them some, perspective, rather than just saying market went up by, 7% last quarter and 4%, this, and our performance was better. I think we are missing on that element, and nobody is focusing on that as a tool to get